So you don't know where to start. With trading, it seems like there's an endless variety of different strategies and setups you could trade. I'm going to break it down real simply for you. I'm going to give you a 3-step process that will help you make money every single day in the market. Now, this isn't clickbait. I'm just going to show you on the chart. So stick around. We're hopping over right now. Look at this on TradingView. With any sort of chart analysis, the most basic principle that anybody's going to teach you is to start from the top down. Top down analysis, you might be saying, yeah, that's kind of a buzzword. What does that actually mean for my trading? Look no further. I'm going to explain it to you right here. When you're looking at a chart, my rule of thumb is you want at least 4 time frames. If you're going to be trading, let me say this again. If you're going to be trading on the 1 minute or the 5 minute, that means you need to look as far as the daily. And we're going to split this up into really easy segments. So what I would do, if you have any sort of layout, to make it real simple on your top-down analysis, go ahead, take 4 charts and make them look identical. With these 4 charts, these are going to be essentially your roadmap. Go like this. These 4 charts will be your roadmap. We're going to have you on the 2-minute chart right here. We'll have you on a medium time frame for some sort of structure, right? That's going to be your 15-minute. That's going to be forming your intraday bias. In addition to that, you're going to need your 60 minutes so you can see the past few days and see how price has been behaving. And then you're going to need your daily chart. These will help you determine the best place to execute trades, as well as how can you structure risk. Your daily chart is where I personally like to draw my targets. So as you can see right here, we can go ahead and start to pick apart this chart. As you can see, if you've been watching any of the channel recently, we've talked about this range right here. And when we started to break to the top side of the range, the idea was that we were going to hold this upside break and then look to trade back towards this swing high at 20,400. Now, trading isn't always going to be that simple. A lot of times you'll run into an area like this where the consolidation is occurring on the higher time frame. And with this in mind, you really want to focus on points of interest inside of that consolidation. So that's where the 60-minute time frame comes in to play. So again, for the daily time frame, number one, you want to be associating with key swing points on the higher time frame, such as, something like this right here. And again, we'll go ahead and mark this out. So essentially, when you break above a range, let's just say this range down here, your next target in mind should be trading towards this upside. That doesn't mean you can't short against it. It's completely reasonable to do so. However, you need to have some sort of reference point inside there. So we're going to give an example right here. Let's go ahead and make this example line dark. Let's make it blue, actually. So you can see in this specific day, we'll actually scroll back a little bit in time. We'll go to the 60-minute, and we want to see how we react to that blue level, right? So in this range, actually, that's what we're looking at. In this range, you can see what when swing highs are getting manipulated. Right here, you see there's reactions to this pivot point. Same thing right here. When you have an extended rally, right, and you can see that this type of move is extended, and not in like a way that it needs to sell off, but it's just moved up quite a bit. When you see something that's moved up quite a bit and you see these failure swings happening where it's unable to break and sustain a move above, that point of interest becomes the previous swing point. So what does it look like on a lower time frame when you zoom into an area like that? Let's take a look. These are the same type of methods and tools that I use to structure my trade ideas. I would look at something like this. I'd see the steep rejection, and then I'd be considering this initiation of that push higher to be essentially where I'm looking to get short below. So you can see on the 5-minute, we'd want to be getting short below this, and then you can reach for that downside level that we referenced earlier. That's an example of how I use a couple levels. There's no P&L charts because I read some of you guys don't want to see the P&L. You just want to see the strategy. So let's test that out. I'm going to give you the raw strategies that I trade and see how much that actually registers with you guys, because again, I get it. When you start trading, a lot of this is intimidating. I don't want you to ever think what I'm trying to teach you is by any means trying to showcase how great I am. I don't think I'm a great trader by any means. I'm just sharing my perspective. It shouldn't feel any other way than that to you. And these videos right here will be an attempt to kind of lean more into that. So what I'm looking at here, I want to see, if I'm looking to trade against the trend, I'm wanting to see some sort of bullish level get invalidated. That could be number one, a sweep of a previous high like we mentioned. Number two, it could be some sort of bullish candle where that creates an imbalance right here being disrespected. When that happens, this tells me that price is likely to trade lower if there's reason for it to do so, meaning is there something to target on the other side of the range? And you can see usually by looking left, remember that line, look left. You don't want to get run over, look left. This applies to anyone, I guess, in American countries, right? The way the traffic flows, you always got to look left, see what's there. So with that in mind, these downside levels, that's where I'm drawing targets from. So I can trade anything short from here down to here. For me, that's a reasonable trade. There's a lot of opportunities you could find within a range. Typically will be associated with a sweep of the opposite side of the range. Now, sometimes you could catch these longs like this, but when there's no sweep, there's nothing that ran below the previous low, it makes it a little bit tricky, especially for the way that I like to trade. So this is exactly how you want to be integrating these timeframes. Again, daily, like we said, is where you draw targets. So this gives you the construct or the long-term perspective, basically from point A to point B with these red lines. Where can you find trades against that? Might be the hourly, where you look for some sort of manipulation on the external to target internal, meaning does it sweep and fail the outside of the range? And then if so, where can we target inside of the range? That means somewhere maybe the midpoint or the extreme other side of that range. With that being said, if you have to trade below that, let's just say you have an hourly structure, 15 minutes is essentially where you're going to look to find the timing of that type of trade, right? So you might see a break of structure to the upside, something like this, and you might want to get long in here. But it's typically not the best idea to get long right after a 15-minute expansion candle. You might want to wait for that to pull back, and then maybe you look to trigger the long above here, above that pivot, that upside down H, this order block. So with this timing, it might tell you that you're going to be sidelined for at least 30, 45 minutes as this pulls back and forms a swing point right here. Then you look to get long right there. Maybe it takes you all day to get the trade. But the point is 15-minute is essentially what I use as my timing mechanism. This helps me position better within the hourly expansions. And ultimately, how do I time my entries with that time frame? I use a lower execution time frame, such as the 1 minute or the 5 minute, or even, sometimes the 30-second. It really depends. So we can look at here and say, we don't want to really be getting long until after 10 a.m. So we'll go ahead and mark this out right here, and we'll scroll back on the 1 minute and see what this looks like. As you can see right here, we had that 15-minute level of interest. So when we break above here, we can see that, yes, there are numerous trades that can be taken against that key level on the 15. Based on the time of day, any of this would be acceptable. It's just, do you have the risk tolerance to allow for you to hold through this consolidation, or are you simply going to wait until we look to resolve higher? There's a number of ways you could trade this, but essentially the best way to trade is going to be in a way that allows you to take risk off the table. So for instance, instead of perhaps trying to buy right here and then sell, all the way in the afternoon, maybe you can look to buy right here and then get out right there. You target that swing high, you take the 40 points, you put that in your account and you call it a day. Maybe then you have the room to put on half size later on and look for an entry alongside the trend. Now, what trades do I personally like? I like trades that are somewhat of a pullback. So you might see something like this. I like this type of trade where you break above there, the upside down H, the order block. You could buy in here, sure. I like the extra confirmation buying right here. I like sequential sweeps. So you see a sweep right here, you see an order block there, and you see an order block there. I think that's a powerful trade. It just is very slow afterwards, which is sometimes not expected, but that's essentially how I like to view the market. So again, these are the basic systems that I use to trade. I'm combining top-down analysis in a way that is easy to understand. I don't like to have a ton of indicators. I like to use points of interest, because all I know is that at these points of interest, we are going to see some sort of reaction. Now, this 20,044 level, is that random, or is that simply a level that is provided on the daily chart? Interesting. So the way you see this daily chart react right here, we see that interact on the 1 minute. Now, hopefully this video has helped kind of inspire the idea that higher timeframes do have influence on the lower timeframes. There's no point in me trying to articulate anything in a way that's hard to understand. I'm just trying to show you that this level right here, for instance, is valuable in the lower time frames. And if you're not aligned with the time frames, you're simply not going to catch the most powerful moves. So if you enjoy this type of content, be sure to leave a comment. Let me know. If you're interested in trading futures, I have a free Discord. It is linked in the description. Feel free to check that out. There's going to be all kinds of information in there. I do some streaming. You can come check it out anytime. I will be live this upcoming week. You can see my members in here winning, putting up thousands of dollars a day. You can see my daily P&L in here. I post all kinds of charts, a lot of insight. Whatever you might need to know, it's going to be in the Discord. And if you are new to trading futures, I definitely recommend checking out Top One Futures. My code DTA will save you 55% off any account. Check them out. There's different accounts. I personally trade with a 150K instant funded account. There's no eval. You have a daily loss limit here. You have a trailing max drawdown, and it trails at the end of the day. So trade this, aim for about 20% consistency on your days, and it's the quickest way to get a payout. If you're looking to get invested into trading futures with very little capital, I recommend doing something like this. If you're brand new, maybe check out a challenge account, less cost. It's a monthly cost. This is just a one-time cost. But I think prop firms are the easiest way to leverage a little bit of money to make thousands in payouts. So hopefully you guys learned something in today's video. Again, just a very simple bread and butter technique video. It's a technical trading strategy that I use that's quite simple if you just know how to apply the pieces in the right order. So until next time, take care, and we'll talk soon. Later.